talent in Nigeria is can potentially be one of our unique selling points because we have a large population of young people. Our median age is about 18 years old in a population of 220 million people. That shows you we have the raw materials to create solid human capital.
You're welcome to the Economy and Politics Conversation. I'm Oto Abasiakon. This edition will be looking at building a resilient financial sector for Nigeria's sustainable economic growth. My guest for this conversation joining me in the studio is Mr. Lami Adekola, Director of Policy and Public Affairs, EnterpriseNGR. Thank you so much for taking our time to be in our studio today, Mr. Lami Adekola.
Good morning, Otto.
Great.
Thanks for having me.
Great. So recently, EnterpriseNGR launched the State of Enterprise 2026 report, which is quite a remarkable report. You've been doing that, your flagship report. And the first interesting thing around that was the issue around talent. You know that Nigeria is home to global talents, whether it's legal, financial services, and technology sector. We produce a lot of great minds. We don't want to go through the names. But one of the biggest concerns is that we've not been able to retain such talent to help build the economy. What role can the financial services sector play in achieving this for the country at this time?
Okay. Thank you again, Otto. And let me start by talking a little bit about the State of Enterprise report and what we cover in that report before going into your very good point on talent. So the State of Enterprise report is our annual publication, as you rightly noted, that covers the 9 subsectors of the financial and professional services space. So it covers banking, asset management, capital markets, pensions, insurance. We look at non-interest finance. We look at fintech. We look at sustainable finance, and we look at professional services, which covers, as you know, legal services, and professional services firms generally and all. So it's that one-of-a-kind report that dissects the entire financial and professional services sector with the aim of identifying areas where we're doing very well and spotlighting those areas, but also areas where there is need for improvement and policy recommendations are being made. So it's our number one policy recommendation tool that we leverage. And we rightly touched on talent in that report. Talent in Nigeria is can potentially be one of our unique selling points because we have a large population of young people. Our median age is about 18 years old in a population of 220 million people. That shows you we have the raw materials to create solid human capital. And to a large extent, I believe we currently are creating good quality talent because anywhere you go in the world, you see top Nigerians in top organizations performing very well. So in the financial and professional services space, for example, I'll give you one example of when we were having a meeting, a roundtable with the leading players in the UK financial and professional services space in London. And we had players from the London Stock Exchange. We had players from their big banks, so Barclays and the likes. We had fintech players. We had the Magic Circle law firms all present. And guess what? About 40% of the people in the room were Africans, and 90% of those 40% were Nigerians. 40% Africans were Nigerians, top Nigerians in top places. So it tells you talent is a competitive advantage. However, we train some of these talents here locally, and a lot of them move to look for greener pastures and look for opportunities outside here. On its own, it's not necessarily a bad thing. Because Nigerians have a strong affinity to home. So a lot of them go out there and actually you see the results in large remittance inflows that we see from Nigeria. And remittance is one of the key FX sources for Nigeria as a country. So it's not necessarily a bad thing. But as we grow as a country, we're getting to a place where we now have to, when it comes to talent, we have to adopt like a three-pronged approach where production is number one. We increase the production lines of talent and ensuring we get good quality talent coming in through the pipeline. And one of our initiatives at EnterpriseNGR is the Youth of Enterprise Initiative, which is an internship initiative focused on getting raw talents from everywhere across the country. So we have one intern, at least one intern in every state, and training that talent and placing them with the best companies in the financial and professional services sector in Nigeria for 6 months. So 3-week orientation and a 6-month comprehensive internship where training is still ongoing to feed that solid pipeline of talent. And we've gotten about 89,000 people registered for it, and we've placed well over 3,000 young people. So that production pipeline, we're following it. Second one is a good point you've made, which is retention. And rightfully so. We, obviously, as I mentioned earlier, we create good talent, but we need some of this talent to remain here, a reasonable chunk of this talent to remain here to help develop the economy and go into critical areas of the economy. And when it comes to retention, you ask yourself the question, what does talent want? So talent basically is looking at a good quality of life. So good quality of life will come with global standard remuneration.
Global standard, very important.
Global standard remuneration.
Yes,
so if the remuneration is comparable to what I will get anywhere else, and I'm getting those good jobs here, I'll stay. The infrastructure. So security, roads, transportation network, electricity. If that works for me, or I can create it for it to work for me, I will stay. And generally, the exchange rate being stable. So I have, I'm paid in Naira, but I can compare myself in 2-3 years to a professional in New York, regardless, because there's that stability of the exchange rate. And so there's the macro element that makes talent want to stay. I'm able to get a good job, a good, well-paying job, and I'm able to benefit from infrastructure that makes my life and my standard of living better. So I'll stay. And the third one, after retention, so creating these people and retaining them, is now attraction. We just don't want an economy where it's only Nigerians that operate in the economy alone. We want the best talent in the world. So we want to be able to attract the very best, whether that best is coming from India, whether that best is coming from Europe, whether that best is coming from South Africa, regardless of where that best talent is coming from, we want to be able to attract them. And that ties into the quality of organizations we have within our ecosystem as well. So we need to build leading organizations that are able to attract the best talent globally. And part of what we're doing with EnterpriseNGR and the financial and professional services sector is to make Nigeria Africa's premier financial services hub. So our ecosystem would have the biggest players or develop the biggest players across the continent. So when you're looking at the biggest banks, when you're looking at the biggest insurers and the rest, they would be in Nigeria. The global ones would be in Nigeria, but the local African firms, Nigerian firms, would also be supported to challenge and be big enough to attract. And I'm sure we'll talk about this later on, but the Lagos International Financial Center is a big deal around that.
Yeah. Talent is a very important thing. So I understood why you had to take some time to really explain it. Talent is a big gold mine for Nigeria. And if we harness it very well, we can continue to grow our remittances, which for over $20 billion to something much more significant. Yeah. Let's look at the banking sector because, I mean, the largest recapitalization exercise was concluded, raised over 4 trillion naira. And your report has talked about the need for it to translate to supporting real sector and create catalytic sectors of the economy that can unlock more economic activities. And ProShare, as you know, recently launched its flagship 5th edition of its Tier 1 Banks report, and also harps on the need to have productive sector support that unlocks opportunity for the economy and also targets the real sector to grow an inclusive economy. But just give us insights into this banking sector post-recapitalization. What is the game-changing effects we're going to see now?
Let me start by saying Nigeria's banking sector recapitalization exercise is one of the most successful and least disruptive recapitalizations in recent times, because we're all in the market from the first Soludo era recapitalization going into the second recapitalization flows and the systemic challenges some of these brought on, even though the banking sector emerged stronger after all. This recapitalization exercise, raising about 4.7 trillion naira, has put the sector on a solid footing, on a solid ground, where it can now say, oh, liquidity is no longer a challenge. And it was a necessary endeavor because of the devaluation in currency that happened and a number of stuff. So it was the right direction from CBN, and it was well managed to this logical conclusion where we have bigger, stronger, more liquid banks. But that in itself is not the end in itself. It's not, oh, we have very liquid banks and oh, kudos, that's all. You now need to start making sure monies, funding starts finding its way to the critical sectors. In the past, a lot of liquidity found its way to government securities. And it's good to fund government, but it's better to fund businesses, to fund innovation, to fund infrastructure development, to fund the backbone of any economy. And this is where the banks now need to start moving to. And it's not just a bank effort, it's a combination of the banks, the regulators, and what I would call catalytic support. So while liquidity is no longer a problem, why are banks still finding it difficult to funnel capital to some of these projects? Banks love a return, they love a good project, but there's also the element of risk. And if the risk is high, they won't want to, depositors' funds is sacrosanct. You won't want to risk depositors' funds. So we need to step down and go into the underlying reasons why this is not happening at the moment. And when I talk about catalytic support, we could say things like credit enhancement from organizations like Nexim or BOI to say, look, we would provide guarantees, first loss guarantees for banks that are willing to lend to this particular sector. As such, you're not taking the risk of that project on a standalone, you're taking the risk of BOI, Nexim, or any of these potential catalytic support infrastructures that we can put in place. And the regulator also encouraging lending to the real sector. We must, at the end of the day, develop the real sector because they are the ones that employ the largest labor anywhere in the world. You need the real sector performing on all cylinders. Aside from that, I'll touch on the other bit of consumer lending. So the multiplier effect of consumer lending to aggregate demand generally in an economy cannot be overstated. So I say this quite often. If I have 100 naira to spend and I take my 100 naira and go cash down to buy, say, a car, right? Let me use 100 million. I take my 100 million to buy a car today, cash down. I can only buy one car. But if there's consumer lending that says, oh, I could take 20 million, buy that car, possibly a locally manufactured car. I buy that car, I still have 80 million to play with and buy other things and demand other things, which means in the economy generally, aggregate demand has gone up. So the importance of that credit to the real sector is that my 20 million, I leveraged a bank loan to buy a car. That local car manufacturer can employ a number of more people into his operations, can boost his operations and boost revenues coming to him. And that in itself is a unique economic catalyst that can happen. If you now go back to other effects around stuff like, because I bought that car on using consumer credit, they will insist I insure it, right? That has an effect on insurance as well, and insurance has the uptick. So we're at a very great position with the recapitalization exercise. And I'm very optimistic that as we go on, we will start seeing solid improvements. I'm very excited about the banking sector. I'm excited about the things happening around it. The national identity management, the new law around it also helps, because we can now identify the individual a little bit better. And banks are no longer scared that I give this individual a loan and that person can poof into the air and I don't see him anymore.
The NC Act is a game changer too.
Yeah, it is.
So you mentioned insurance. Let's just dig into insurance for 1 or 2 minutes. They just concluded their recapitalization last week. And like you rightly said, insurance has to also rediscover itself and be a big player. Like you see in the United States, in Europe, insurance players are massive in the financial services sector. What do you anticipate?
Yeah, so the insurance sector in Nigeria is one that is at a solid inflection point, thanks to the NIRA, the Insurance Act that was passed around this time last year and brought up the need for recapitalization and a number of other salient policy directives that would move insurance in the right direction. And the thing about Nigeria's insurance is it's growing. I'll give you some numbers. So I remember in 2023, we were all celebrating gross premium written, hitting 1 trillion. Oh, wow, this is fantastic. 1 trillion for the first time. In 2025, guess how much it was? Not quite, but it's about 2.4 trillion thereabout. In a space of 2 years, for a sector to double such an important indicator, it tells you the massive potential within that sector. And the recapitalization exercise that has just been concluded, we don't have the full picture yet. However, it's from feelers in the market. A number of the insurance players have been able to meet the recapitalization base that has been set. A number of them are exploring and finalizing their business combinations. And at the end of the day, we would morph into a market that has a stronger insurance sector. And the importance of that sector is, I don't know how I can estimate it, because it brings resilience in any economy. It brings resilience in businesses. It makes innovation easier because there's a fallback if anything goes wrong. So we're definitely in the right direction when it comes to that. And at EnterpriseNGR, we have what we call the sector transformation initiatives, where we every year take a look at a particular sector and say, let's bring all the key stakeholders across the financial and professional services space, not just that sector alone, but take all the key stakeholders and let us focus on this one sector and try to unlock some of the thorny issues that that sector has and set targets for ourselves. So this year, insurance is that sector we are looking at. And we had an insurance sector transformation consultative forum earlier in the year, partnering with NIA, the key players in the sector, and the regulator. So the Commissioner for Insurance came for the event. The senator in charge of banking and insurance, Senate Committee on Banking and Insurance, was at the event, and key CEOs across not just insurance, all of the sectors as it relates to FPS, because there are interlinkages. Yes. We sat down looking at the NERA, but also looking at how can we move from a penetration currently around 0.5% to around 1.5% in the next 3 to 4 years, and coming up with actionable steps like, can we improve awareness and literacy of around insurance? Because a lot of people, even down to microinsurance. Yes, even down to microinsurance, a lot of people are not aware or have a negative perception of insurance, that I got this my insurance, so don't no. And looking at the different potential quick wins we can push. I mean, the regulation on a maximum of 60 days on claims payment, massive, improves trust and would help moving that sector forward. So I'm confident that after this recapitalization exercise, coupled with a number of initiatives taken by actors like ourselves and the entire sector as a whole, but also the NERA, insurance finally seems to be in the right trajectory, and we all need to continue to support to make sure it happens. It helps the entire economy.
Yeah, I think the corporate sector, the private sector is trying to do a lot around that, but with the green bond subscription oversubscribed by 193% in 2025, the major question is, what must happen to scale? How can we connect, looking at the global asset under management ranging over $2 trillion? How can we plug into that global climate financing, particularly to address issues like climate resilient infrastructure? When you see flooding, when you see the whole climate change effects happening across the country.
Otto, you make a very good point when it comes to green finance, green and sustainable finance. And yes, it's an area in Nigeria that seems nascent. So I'll use the figures you've mentioned, $27 billion required annually. And we're currently sub 100 billion naira, which is what? Less than 70 million US. Less than 70 million US compared to the numbers we should be doing. But another statistic that is important is the oversubscription we've seen. Almost 200% oversubscription in issuances that happened. And that in itself is a good thing, because it shows there's interest from domestic capital in green and sustainable finance. But we should backtrack and say, what is the actual underlying issues around the numbers we're seeing? And one of it is the project structuring capacity. So the ability of Nigerian project owners, Nigerian advisors to structure green projects in such a way that it attracts not just domestic capital, but international capital is still an area we need to improve on. We need to improve on the talent that helps with structuring. We need to improve on the local financial services sector talent that even analyzes these projects and make the investment decisions on them. But definitely the interest is there. There is a clear need for us to tap into the global market space for green funding and sustainable funding. And I keep going back to the Lagos International Financial Center. Green and sustainable finance is one of our unique selling points that we are targeting. It doesn't mean we have the strength in it today, but we believe we can build that strength and be a gateway for the continent, for all of the continent. It's so critical that we have just 3 unique selling points for the Lagos International Financial Center. But green and sustainable finance is so critical that it represents one. And a lot of work, even before the LIC launches, needs to start going into improving our structuring ability, needs to go into the mindset of there are funds available for green projects. How do we, so state governments coming in and raising green bonds, but having the stock of projects to back it up. Corporates coming in. It's not stuff that we need to reinvent the wheel for. Partnering with other jurisdictions where green and sustainable finance is stronger is an approach that we also want to adopt. And leveraging these international partners to say, let us focus. But all said and done, there are policy initiatives from SEC, from the NGX, from a number of players, from FMDQ, targeting how to boost that space. And over time, I envisage we'll start seeing positives around that.
Let's take a few seconds to talk about the value-added tax, company income tax, the whole tax landscape. It's interesting to see that about 30% of total company income tax collected in 2025 came from the financial services sector, which is quite interesting, quite remarkable. I mean, when I looked at it, financial services and professional services too only contributed 2.11 trillion total for 2025. Maybe 1% of GDP and anything, but that is very significant.
Yes.
That's very significant. So looking at that and then look at the current tax landscape, does that incentivize more activities in the sector? What needs to be done to strengthen the tax system for this sector?
I think, so a lot of reform is happening in the country at the same time, and a lot of them are positive. A lot of them are reasonably well managed. And the tax reform is one of such, where the tax system is simplified and the tax net is being broadened to bring more people into the tax net. But also the tax structure is people-centric, meaning there are less low-income individuals that would not need to pay tax. So they get a tax break, and basically their quality of life can be improved. You mentioned the FPS sector being a major contributor to tax. And it shows you the importance of the sector. It shows you the diversification generally happening in the economy. So a lot of people had that perception of Nigeria as an oil, largely oil revenue country, but quite frankly, we're moving into non-oil and a service economy with about almost close to 70% of revs coming from the non-oil space. And a large chunk of that, as identified by you, is from the FPS. So the simplicity in the tax administration structure would see over time improvements in collections. We've seen the uptick from when the law was passed, but it's upward trajectory, because our tax to GDP ratio is still not comparable to our peers on the continent, not even internationally. It's not yet comparable, but this law makes that a possibility. And sectors like ours that are getting bigger, stronger with the recapitalization effort across the different banking, insurance, different aspects of our sector, and even capital markets as well. There's an ongoing recapitalization there. The bigger they get, the more they're able to serve the sector, the more they're able to contribute to economic growth in the sector, but also the more returns they make. Their bottom lines would also fill it. And when the bottom lines are stronger, they pay more tax. So it's that fantastic cycle that creates wealth in nations when you get the policy right.
So in 1 minute, tell us about the outlook for the financial services and professional sector, and tie that into what's happening with their lives. Just
1 minute is a very short time span, but the reform we're seeing in the financial and professional services sector almost across every vertical. We've talked about banking, insurance, the capital markets and asset management, even pensions is experiencing significant reform. So reform is happening everywhere. And that reform ties into the ambitions of EnterpriseNGR, where we want to create Africa's premier financial services hub here in Nigeria. And we are working with the federal government, state government, and EnterpriseNGR that represents the private sector. We're working to establish the Lagos International Financial Center, which would be an absolute game changer, not just for Lagos, not just for the sector, but for the Nigerian economy. It will be a marker that people would go back to several times to say, this is when the economic trajectory of Nigeria actually took off. And it is us creating an enabling environment for global financial and professional services sector players, the biggest and best of them, to find their way to Lagos, Nigeria, for global capital, global investments, because these guys move with global capital and global investments to find their way to Nigeria. And they'll find their way to Nigerian projects, which could be infrastructure projects, which could be manufacturing, which could be agriculture, which could be projects across the different subsectors of any economy, of our economy here. And you start seeing a significant uptick in transformation across board. And what will the center provide to attract these people? So clarity of rules and regulations and familiarity of rules and regulations. So basically the rules and regulations within the Lagos International Financial Center will be similar to what you will get in the best jurisdictions across the world. It will be similar to what you'll get in New York, in Dubai, in Singapore, all of the best jurisdictions. We would have that environment within the Lagos International Financial Center that has the best rules for you. Dispute resolutions will be top notch. You have an environment where dispute resolution doesn't take forever. It is fair and enforceable. It's been created. You have an environment where ecosystem players can benefit from the fact they are within that ecosystem and basically trade off each other these benefits. So we were members of a group called the World Alliance of International Financial Centers, WIFES. And in that ecosystem, it has IFCs across the world present. And one of the conversations we're having is license passporting. So basically a player in Dubai International Financial Center can easily passport their license and come establish in Lagos International Financial Center in a very short period of time. So that company mobility makes the ease of organization setting up and also makes the ease of capital flowing into our market. So it's a game changer, and kudos to the federal government for the support for the initiative. It's tremendous. Kudos to Lagos State for championing the initiative. And we're excited at the significant transformation and uptake we would see, not just in the center, but in the economy as a whole and in our sector. So all of the positives we've spoken about over the last few minutes, you would see them on steroids, because the LIFC is helping to push and make those positives even stronger.
Very, very insightful conversation. If I allow you, Mr. Lami, I know you go around giving the apostolic work of how to position our financial services sector, especially the game-changing effects that we're expecting from the Lagos International Financial Center. We anticipate that. Thank you very much, Mr. Lami Adekola.
Thank you,
Director,
Otto.
Policy and Public Affairs, EnterpriseNGR, for this very interesting and insightful conversation on building a resilient financial services sector for sustainable economic growth in Nigeria. Thank you for the time.
Thank you, Otto, and well done. Well done to you guys for the work you do.
To our viewers, I believe you enjoyed this conversation, and if you want to get further insights, log on to our website displayed on the screen and follow our social media platforms. Till we come your way again, let us keep pace with the conversations on the economy, financial markets, policy, and business space. I'm Otto Basabasekong. Thank you for watching, and bye for now.